Hi everyone, I'm Dale Smith, aka Journo Dale, and we're here to talk about Canadian politics. All right, we're here with Laval University's Professor Stephen Gordon, and I figured we would try and demystify some of the inflation talking points that are out there right now. One of the first ones I think that gets mentioned the most, particularly from certain conservatives, is that this inflation is being driven by government deficits. And I haven't seen that in any Stats Canada or Bank of Canada report, but maybe Stephen Gordon can explain that one for me.
Well, to the extent that government spending playing a role, it's government spending that occurred during the COVID crisis, all that income support measures. It's generally acknowledged that those measures were, in retrospect, more generous than they had to be. That's not a criticism because, of course, nobody knew what was necessary. As Dan Gardner said on Twitter, at the end of the Second World War, Canada had a huge amount of excess military equipment. That doesn't mean it was a mistake to build it.
Right.
Okay. Don't know how things are going to go. You don't want to run out. And so that's kind of what happened. The measures were, in retrospect, because nobody knew it was going to happen, more generous than they had to be. So that there's a lot of excess savings that was built up during then, and a lot of it is basically being spent, and that money is still sloshing around. Important to remember that all those income support measures were adopted unanimously by the House of Commons. So if you're going to blame anybody, the blame is everybody. So
yeah.
That said, going on, certainly the federal government has not been particularly diligent in applying fiscal restraint. So certainly what they're doing now doesn't help. So the Bank of it does make the Bank of Canada's job harder than it has to be. To the extent that it's a cause, it's just making it harder for the bank to deal with those. So yeah, it certainly is playing a role. At this point, it's a very minor role, but a role, yes.
Okay.
I certainly wouldn't say that current inflation is being caused by the current deficit.
Okay, and that was kind of my next point. Is it doesn't seem to me that I think the 60 billion number is very big in retrospect to the size of our economy. So I wouldn't think it would have a very outsized impact as it would if it was a much larger number relative to the size of our economy.
$50 billion in budget cuts, you were saying?
No, the 60 billion deficit that was projected.
Oh, yeah. Well, I mean, it's to say it is kind of marginal. Okay, Canada's GDP is something like $2.7 trillion. So we're talking a very, very small number here. So yeah, like I say, it's at this point it's marginal. The big numbers occurred during COVID.
Right. And this also just kind of brings to mind the last fiscal crisis, 2008-ish, when I was reading things that the Bank of Canada was having a hard time because the government withdrew stimulus too soon, and so they had to keep rates lower for longer. It almost sounds like we're kind of having the opposite effect at this point.
Yeah, and that's kind of why the Bank of Canada was slow to react. It really thought that we were going to go back to the pre-COVID situation where inflation was running under target, and interest rates were very low. But interest rates have not fallen down globally. The interest rates have come up. One conjecture is that all that borrowing by all those governments at the same time absorbed a lot of those excess savings floating around. So interest rates may not be going down back down for a while, if ever. So yeah, there was a certain amount of trying to think of, okay, we're going to go back to before COVID, but not necessarily. So yeah, the criticism at the time was that the fiscal restraint was brought in too soon. Here it would be fiscal restraint has not yet really been brought in, and it probably should be.
Okay. This kind of brings me to the next point, which was this kind of revisionist history that Bill Morneau has kind of been spinning as he tries to salvage his reputation, where he's trying to really hammer home the point about spending being too high during the pandemic. And I know you've tweeted a bunch of stuff about how the situation we're in now, where inflation is running hot, was actually the good outcome. And I'm wondering if we can talk a little bit about what the counterfactual is here.
Yeah. So back in, I think, May, Steve Paulus, who was then governor of the Bank of Canada, warned deflation. And of course, that looks like a silly thing to be concerned about. But of course, the data he was looking at, the consumer price index, prices were falling drastically. Inflation was negative, and at a rate of, an annualized rate of like 3, 4, minus 3, 4, or 5%.
Yeah.
So that was deflation. Something like 15% of Canadian workers lost their jobs in the course of 2 months. That dwarfs the employment losses during the Great Depression, and that was spread over 4 or 5 years. So, in the spring of 2020, we were facing a galactic-sized economic crisis with a serious risk of, meltdown. People lose their jobs, so they can't spend. People aren't spending, so people can't keep their jobs, and just the death spiral. So that's what we were looking at. And at the time, certainly at the time, the idea that we could go back to a situation where, the economy is booming too much even. I'm not really inclined to think that that's really the bad outcome. The bad outcome would have been something that would have made the Great Depression look like a walk in the park.
Mm-hmm. I remember Paul saying something at the time around deflation, something to the effect of, what happens is when businesses have to slash prices, they can't service their debts, and therefore they go bankrupt, and then that starts a spiral into a depression.
Yeah, and just like if people know that prices are falling, people aren't going to buy anything because they wait for the price to fall. People aren't buying anything. Well, prices are going to fall because people are. So it's just in some sense. Same thing for inflation. A lot of these things are, the expectations are self-fulfilling. If you expect inflation to go up, inflation generally go up because people are going to raise their prices and wages. Same thing going down. So yeah, the real risk, there was a real risk at the time of the economic meltdown. And, certainly the situation we're in now, where unemployment is bumping around historic lows, inflation is above target, but still, 3% and a bit. It's, yes, it's uncomfortable. The bank has to bring it down, but it's by no means a hyperinflation. So, yeah, I mean,
we're not Venezuela.
Yeah, I mean, if we had known exactly how much income support measure we needed, maybe right now we'd be right on target. We overshot. Big deal.
Mm-hmm. So the next thing I was going to ask is about the notion that carbon pricing is driving inflation. Now, I haven't seen this in any CPI data or anything the Bank of Canada's put out. I think Tiff Macklin, the governor, told committee that if they removed all carbon pricing now, it might move the needle something like 0.4%, which to me reads that it's very marginal. Maybe I'm overreading that. I figured I'd get your thoughts on that.
Yeah, and you have to make a big distinction here between a level and a growth effect. Okay. It would be a one-time thing. It would be a one-time effect. Just like the Russia's invasion of Ukraine, that generated a one-time effect. It would show up in inflation. Months it takes for people to be calculating prices after the shock and prices before the shock, but 12 months later on, it would have no effect. Just the same thing happened when we brought in the GST. For 12 months, inflation was 1 or 2 or 3 percentage points higher than it was before, and then as soon as that 12-month span passed, inflation dropped right back again. It would be exact same thing if we got rid of the carbon tax. Yes, you'd see a drop, but it would bounce right back up again as soon as that 12-month window passed.
Okay, so I guess how do we think about this in terms of having a conversation around why these particular talking points end up being, I guess, self-defeating or not really productive to the conversation?
Well, I mean, I guess the political argument is, people don't like inflation. I don't like that thing. Therefore, that thing is responsible for inflation. That's how political comms works. And what can you say? It's like that's people are going to try to blame inflation on the thing that they want to blame anything want to associate anything bad with.
Right.
You're
Okay.
gonna, you're gonna blame. I mean, anybody. You're gonna blame the CEO of Loblaws. Why not?
Yes. Actually, that does bring up a good point. Greedflation, quote unquote, has been one of these talking points. I know you've been pushing it back against it. People like Trevor Tombe have come up with charts that kind of just prove it. I'm just wondering, give me the quick and dirty version about why this is not a real effect in the data.
Yeah, the Bank of Canada also has a report, basically finding the same thing that Trevor did. Yeah, so it's worth asking the question, because one of the reasons why we want inflation to be low and stable is so that if somebody tries to raise prices way above the 2% target, that draws attention.
Yeah.
And so you want to see, well, why, what you have to, in some sense, you have to justify it. Of course, when inflation is high and variable, people can raise the prices and people think, okay, well, let's shrug it off. I guess it must be inflation. So it's worth actually looking. It's a valid question. But okay, it's worth looking, but after you've looked, you kind of have to pay attention to the answer too. And that what seems to be going on. That the Bank of Canada and Trevor in his analysis, everybody seems to find that prices went up, but they were driven by the costs. Profit margins basically stayed the same, certainly in fruit for the food sector. People do mention that but profits have gone up. Well, profits have gone up because the economy is booming. That's what happens in a booming economy. Profits do go up. There's some sectors where the profit rates, markups, margins, whatever, did go up, but there are places where Canada has no market power. For example, oil companies, they profited handsomely from the spike in oil prices, but of course, they don't have the kind of power to force oil or world oil prices up. They're just taking advantage when they can, and of course, sometimes world oil prices go down, and there's nothing that those Canadian oil firms can do about it. So, it's worth looking at, but the data do not look like what they would look like if that was really the issue.
Okay, and I guess the converse side of that is the notion that a windfall tax is what we need to solve inflation. If you can unpack that one.
Yeah, well, I mean, the windfall would be on places that actually had the windfall, like oil companies. But then again, I mean, you can have this conversation, but then you're going to sort of wonder, well, hold it. If you're going to put caps on the upside, oil companies could with great reason say, in that case, you should be offering us guarantees that if price of oil goes down, that you're going to compensate our losses.
Okay.
And, it's not clear you really want to go there. That would open a whole different can of worms.
All right. I think that was everything for this week. Thanks so much for indulging me and my questions, and we'll talk again soon.
Okay, good luck.
All right, thanks. That's everything for this week. Join us again next week for some more Canadian politics. I'm Dale Smith. That's at journo_Dale on Twitter. And don't forget to like the video, share, subscribe, and support us on Patreon. Thanks, everyone.